Welcome back to HECM World Weekly. In our first story, FHA has announced that the HECM limit will be increased effective January 1st, 2024. The new HECM limit, or the maximum home value that can be considered in the federally insured reverse mortgage, has been increased to $1,149,825. That applies to all traditional HECM transactions, HECM to HECM refis and purchases, with case numbers assigned within the calendar year 2024. Now, this effectively increases the HECM limit $60,000 plus over 2023's limit. So how is the HECM limit calculated? The HECM limit is actually 1.5 times, or 150% of the Federal Housing Finance Agency's annual conforming limit. Now, the annual conforming limit is a maximum dollar amount of a traditional or forward mortgage that Freddie Mac or Fannie Mae are willing to purchase or to guarantee. Now, since the 2024 conforming limit is $766,550, we can see that 150% gives us the HECM limit. Now, any increases to the HECM limit in a given calendar year are going to be based on the increase in the Federal Housing Finance Agency's Home Price Index, or HPI. That index, by the way, tracks the average price changes in recurring sales of similar single-family properties that are securitized or purchased by the GSEs, Fannie Mae, or Freddie Mac. And due to the index's growth, both the HECM limit and conforming loan limits increased 5.5% over 2023. Now, while this is very welcome news, especially for those of you originating in high-cost housing markets, the increase is less than half of the 12% HECM limit boost we saw in 2023. That can be attributed to slowing home appreciation. Now, to better understand just how the HECM limit is really calculated and what happens if we see home values decline or crash, you can watch our latest episode of the Industry Leader Update here at HECMWorld.com. Stephen Resch, a name familiar to many of you, submitted a guest column in the popular financial blog The Street. Resch says that older Americans today control $12.7 trillion in home equity, which is far greater than the estimated $6.3 trillion that all Americans have in their 401k accounts. Yet, despite increasing attention by personal finance and senior-focused media on leveraging this largely untapped resource, Resch writes, the adoption of the reverse mortgage remains stuck around 2% of the eligible seniors that are homeowners. Now, one possible reason he cites for this underwhelming number is that they are often considered too expensive. But the question is to examine relative to what? How expensive? Now, no financial service or product is without expenses, says Resch. Consumers pay premiums for insurance, stock market commissions, and management fees, as well as taxes on any distributions they take from their retirement plans, asset sales, and much more. In addition, when one is considering adding home equity to a retirement plan, there will always be costs incurred. And one option is to access the equity is to refinance the property, either with a traditional mortgage or using a home equity line of credit, or HELOC, both which are, in most cases, having upfront costs, in addition to an ongoing monthly payment that must be serviced. But another option is to sell the property, but according to Zillow, buyers will need to budget between 8 to 10% of the sales price to cover the fees and their relocation expenses. Now, while many people understand that there is an immediate advantage of a reverse mortgage, such as eliminating one's required monthly mortgage payment or even having a lump sum of cash for any given purpose, the real value opportunity, writes Resch, can be the potential to access equity at various points in one's retirement with a home equity conversion mortgage, or HECM line of credit, and we all know just how flexible that is. Some utilizations of a HECM could include tax optimization planning, since all reverse mortgage proceeds are typically received as tax-free because they're loan proceeds, not income. That can help when one is attempting to balance their cash flow needs with revenue sources, and can include supplementing cash flow to help maintain a safe and orderly distribution from their invested assets. Another use is managing sequence of returns risk by having an alternative source of cash flow, which one can draw from when investment markets are down, and using the line of credit to pay the taxes on any Roth conversions is another potential strategy. Resch says that one of the greatest challenges for any financial advisor is answering the question, how can I effectively preserve and maintain funds for my clients that will last through their retirement years? What we call sustainable withdrawals. When it comes to reverse mortgages, says Resch, despite the cost to put one in place, when we consider the liquidity options and the flexibility that they can bring to a long-term retirement plan, they are truly a value play that should be considered. And our next story comes from TrustedMortgageCapital.com, an interesting site I found. It says that the reverse mortgages have a history of evolving in response to market stresses, and the recent gyrations in interest rates are now spurring a new round of policy experimentation, which is aimed at helping the market to better adapt to the kind of risk that has materialized recently. Now, some of those risks have been manifested as consolidation. We can see that with Finance of America buying the assets of American Advisors Group, or AAG, Guild purchasing Cherry Creek to help expand their reverse mortgage division, and Reverse Mortgage Funding filing for bankruptcy. So there's been much upheaval in the reverse mortgage industry in recent years. But the remaining players are facing the challenge of maintaining ready sources of cash as a lender, as rising interest rates have increased the cost of funding those loans that have to be purchased out of securitization, or draws that have been subject to delays of going into securitization. So he says this has been a serious concern, which has threatened reverse mortgage lenders' businesses' viability, according to some. But agencies in our government dominate the market. Most notably, it is the Federal Housing Administration and Ginnie Mae, and they have begun to respond to these concerns about lender liquidity in the reverse mortgage space with policies and proposals that are aimed at help managing those costs and making them more palatable and realistic. What you're seeing is concrete action from us and FHA to see if we can return liquidity to issuers for the sake of this program. Now, this suggests that reverse mortgage policies could be evolving for the betterment of the industry in response to the rate risk that we have seen in the last year, and that's similar to the way that they have after other market challenges that resulted in reforms involving financial assessment, taxes, and insurance to address previous issues in the HECM program. So while some worry about the threat that recent rate volatility, consolidation, and liquidity concerns pose to reverse mortgages, others think that those challenges will lead to improved operating conditions. And yes, challenges can lead to increased efficiencies. That, in conjunction with other attractions of the product in the current market, could engage players that may have gained economies of scale from consolidation. It may, too, draw opportunistic new entrants in ways that may revitalize the reverse mortgage industry. Personally, I think I would like to see a large bank return to the lending space. Now, what follows is a breakdown of some of the challenges that have intensified for reverse mortgages as a result of recent market conditions, how policymakers are responding, and some projections for some possible outcomes, and also a general sense of our current market's outlook. And that's a wrap for us. Thank you for joining us for another episode of HECM World Weekly. Don't forget, you can share this video on LinkedIn, and you can also subscribe to our video podcast on YouTube. Be sure to hit the like button as well. That helps increase our ranking, and we truly appreciate those of you that do that. Thanks again for coming back for more reverse mortgage news. Whether you're watching it or listening to it on the go, you can do that as well on Apple Music, Spotify, or on Podbean, and of course here at HECMWorld.com. Have a great week.